Hello, I am reviewing your checkpoint number one, Latanya, and there's a couple things I wanted to bring to your attention. Um, as I go through the journal entries, I like the fact that I see the debits appearing first and the credits appearing second. That's always good. But I wanted to bring to your attention here, this entry, you are purchasing an asset, okay? But you're not purchasing the asset for an expense. Expenses mean you've used it. You just bought it right now. So you want to show your asset, which is good here. But here you want to show that either you paid cash for it or you incurred some kind of obligation to pay it later. In this case, you're going to pay it later. So it's some sort of accounts payable, remember? Now, that's one entry that I noticed that you may need to fix. Also, as you look through here, again, you're looking at paying of rent and 1 month, I think the last month's rent. Now, remember, you're paying something. When the word pay comes into mind, for me, I think I'm spending money, unless I say I'm going to pay it later. So if you paid something, you need to see cash somewhere in this transaction, and I don't see that. I see two good accounts, which I like. These are good. The amount should be here, however. But for this portion of it, you should be showing how much cash you paid out. And you didn't pay $1,500 out. You actually paid $3,000. So that entry you need to go back and take a look at. The other entries here, I don't see anything unusual except for right here. Remember, when you are purchasing an asset, is not the same as using the asset. And if you use an asset, that means you are expensing it. But you never want to credit an expense. You want to debit an expense because debiting the expense is reducing equity. So in this transaction, the office supplies look good, but I think you paid for this. And I don't see cash at all in this transaction. So I need to go back and take a look at that one. This one is kind of the same thing that's going on. You're ignoring the cash aspect of the transaction. Remember, if you pay for insurance for 12 months, your chances are you're paying with cash. And I don't see cash in this transaction. Prepaid looks good. I like that. I just don't like this expense. You're crediting the expense. I truly think that once you use or time has gone by and you've used the insurance, you'll have to show the expense. But right now, you basically just paid for it. So that's for July. August, I'm looking at as well, and these entries sort of look okay. The only problem here in this one is, again, you're paying for the telephone bill that you received in the previous month. I see no cash in this transaction. This entry is the same as before. It shows me that this one, I believe you're actually purchasing the office supplies, but you have yet to, your baking supplies, but you have yet to write a check. So it's some kind of obligation. So you need to deal with that. This one here, it looks to me that you have it in reverse. The payable should be recorded, but it should be increasing the payable. And you should be increasing the expense. So you got these two accounts in reverse. There is no prepaid rent in this case. What's happening here is you're paying your monthly rent with cash, and I don't see cash at all being impacted. With this transaction, I'm not sure why cost of goods sold is being affected. If you are receiving the money from your client from the previous month invoices, cost of goods sold is not appropriate. Your receivable should be going down and your cash should be going up, and I don't see cash here. Let's look at another transaction. This one here, it says telephone expense due. I'm not really sure what this is. I suspect you're trying to record the receipt of a telephone bill, in which case a receivable is absolutely not appropriate. You have to show a telephone expense and possibly a payable of such, depending on if you paid cash. So that entry needs to be looked at as well. And here, you just have the entries in reverse. Leave the dollar amounts alone, just reverse it. Debit should be to the expense and not to the payable. And this one here, I don't know why cost of goods sold is here and bakery sales is being debited. Cost of goods sold should not be in this entry at all. What you should be showing is the receipt of cash for part of it, and the earning of revenue. Revenue should never be debited ever. what you want to do is show an increase in revenue in this case. So the debit here is reducing revenue, and you don't want to do that. So I believe that should be a credit. You should fix that. And the cost of goods sold should not be here. And according to the instructions, I believe August, you have a portion of your revenue in cash and a portion you expect to receive in later months. And this is kind of the same thing that I'm seeing in these entries here, which I'm highlighting for you. Again, the same problem here. Cost of goods sold is not appropriate. If you're going to be receiving cash for your receivables should go down and not go up. And you also have cash in that transaction. Here, the expense should not be, in this case, decreased. You've already recorded the expense. You have to show the payment with cash. And here, again, if you have baking supplies that you've purchased, you should not be expensing it until they are actually used. So the expense is not appropriate here. And again, the mistakes that I see are basically the same mistake, just repeated pretty much. Again, same thing here. Should not under no circumstance be crediting the expense. This looks like a payment to the employee, so the payable looks good. The wages payable debit, but I don't see cash at all in here, so you need to check that. I'm hoping these changes, my comments are helpful to you to let you know what's actually happening and how you should record these entries. But just remember, this one here looks like it's okay. I'm going to remove that. Just remember, if you have any questions at all about any of the transactions in particular, let me know. But I think your problem really is you have to understand exactly what's happening with these transactions, what's going on. You're receiving an asset in this case, and you're going to pay it later. You are paying for your rent for first month, and you are also prepaying your rent. But you're doing it with cash, and you need to show cash. So actually showing what's actually happening and understanding what the transaction is trying to tell you really makes a difference, because sometimes you can really help you catch a mistake before you make it. I hope this helps you, and let me know if you have any questions.